Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It is October 23rd, and this will be our chart lesson for the day. Um, Really, this is mostly kind of sideways today, but it is an uptrend. You can see that the EMA, even though we're getting sideways, this is one of those days where you kind of shoot up and you go sideways, you shoot up and you go sideways, you shoot up and you go sideways, and but this is an uptrend. There does appear to be a two-tiered channel right here. You can see that this midline here, we worked off that midline. We didn't quite get back to this trend line right here. It doesn't matter. We turned up there. You can see this channel working down. We had the break. We had a new low with an overshoot, and then we reversed. So you still had several signals that we were going to go higher from there. That's into 2 o'clock, so it doesn't really matter anyway. But it's just kind of a quiet day. Somebody asked me today about, if this was common for it to be slow like this right now. And I think it's a combination of things. Usually the fall is pretty good. And actually, when we came into the fall this year, it was pretty good. We had some fireworks, in fact. Um, the market was crazy almost. Some of the highest volatility we've had in a long time during the fall. But it's pretty much dried up now, and now we're looking more like a normal ES. And I think part of the problem is we're still trading up here around 3,000, which is I know we went much higher there for a little bit, but we didn't stay up there very long at all. And it appears like we're trying to creep back up there and retest those highs again. So that's what it's looking like. Doesn't really matter. We don't care that far out. We're just interested in what's going on each day. But it has been kind of quiet lately. Like yesterday was that real tight range. But I'm telling you, those days are so predictable. I like those days. Today's a little harder than it was yesterday, in my opinion, because you don't get as many setups. But it looks like it's going to sell off, and then it just rockets up another notch. And just like here, it looked like it was finally going to sell off, and then it rockets up another notch. And it just kind of did it here. Actually, if you notice where it bounced, this was the close yesterday and this was the open today, and that's where we bounced. We made that little double test of that level and off we went. And so that's kind of interesting, and you'll see those levels come into play. Somebody actually asked me, if that's one of the places we look for a trade. You definitely want to watch and see what happens there. But you can't ignore the context of the price action. If we're trading down here, yeah, we might get a reversal here, but you don't necessarily want to be looking to buy here. You want to make sure that you want a reversal pattern, or you want the trend line working back in the other direction. You don't want to just try buying down here because prices are bouncing. So keep that in mind. But a couple of things I want to talk about before we got into the video. I'm getting a lot of feedback. People tend to like when I get on my soapbox and talk about things that are trading related, and it does help. I agree. And so sometimes I get off on a tangent or two, but for the most part, it does help. One thing I know people like to hear is they like to hear other success stories. So I've had several people after my little rant the other day about the trader, basically telling me that I was doing something different than what I was actually teaching here or whatever. I've gotten a lot of emails, and I appreciate everybody, all the support and all and so forth. But several people have sent me some of their success letters along with that, and I thought maybe I'd read a couple of those to you today. There's a couple. One of them's real quick and short. One gentleman said that I won't read his whole email. I'm not going to read all of either one of his email because they're kind of long, and not all of it's really relevant either. But one trader told me that that the ES was really just not fast enough for him. He preferred something with a little more volatility, and so he had converted over to the YM, which is I believe that is the Japanese yen, and but he wanted to share his results. He's basically using exactly what we do in that market, but he tweaked it a little because that market has a little different personality. But I'll just read it to you. It says, using most of your guidelines and a little bit of my delta wave analysis, the results have been pretty solid. Obviously, I'm getting more trades than I would in the ES, but I like the action. He's using an 8-tick stop, a 6-tick profit target with a runner, and he's loading 5 days of live data. I guess that's what he means by that. And he has 90 wins, 18 losses for 83% winners, which that's pretty dang good, especially in the yen. I've traded that before. I've used our strategy with it. Like him, I tweaked it. I think I was going for 10 ticks when I did it, rather than 4 ticks, because you can get 10 ticks. Generally, if you catch a move on the yen or something like that, you might get 20 or 30 ticks easily. It's easy to get runners on those, but you're going to have more losses there. So if he can do that at 83% there, if he's stuck to the ES for a long term, he's probably a 90% trader easily. So good for him. But that just shows you can use this in other markets. He talked about I think he said he used a 570 tick chart. I can't remember. I didn't write that part of it. I didn't copy off that part. I copied it out of his email into another page because I put a couple of them on here, and I didn't want to have to go back and find the emails and dig through it to find the part I wanted to read. But here's the second one. This gentleman sent me one too, and again, this is not his entire email because it was rather long. This is just the part that I think is pertinent to what we're doing, the point I'm trying to get across, but I'll just read it to you. And this is his words. So I've been training on the simulator since 2014, as you suggested, comparing my charts to your scrolling through aftermarket, my trades, and of course I learned a lot from watching your videos every night and comparing. The model you always mention does work. I have just gone on Social Security recently and working 2 days a week and trading live the other 3. I've traded live off and on since the beginning of the year. I have an 84% win rate, have been making decent money, only trading 1 contract. I'm going to step it up a bit to go with 2 or 3 contracts and see how I deal with the added risk. But following your strategy for so long has made me very confident, and I still keep your advice in mind that we are trading against the best traders in the world. I will be signing up again for your premium website soon because I want to compare your mid-morning charts and go over all the data again as a refresher. I still experience some doubt when the channels might change, and when I lose, it is mostly I didn't get the short term or channel completely right, but I'm working to eliminate mistakes with this. Well, that's if you're winning at 84% clip and you're still struggling in those areas, if you just wipe those out and don't trade those, you'll probably jump up to 90% as well. But he goes on to say, again, what you teach works, and I followed your blueprint pretty much to the letter, and I will keep getting better and making larger amounts of money. Also, as you said in an article, you have to be committed and not treat trading as a hobby. Don't go with real money until you make money on SIM, or you would just be a donator. So yeah, he's been listening. I didn't want to inundate you with emails because I know you get many and you're so generous. The rest of that's just him saying thanks. Basically, I won't go through that part. I don't read these to pat myself on the back. I just read them to you so you can see that other people are doing this and other people are having success doing exactly what we're teaching here. So it does work. It can work. And most of you that are here probably know that, except for our little visitors that like to come in and drop their little innuendos and, little comments and things like that. But this stuff works. And, if it doesn't work for you, that's fine. Go find something that does work for you. But for the most part, if you stick to the formula and you do what I tell you to do, it does work. So not everybody, not everybody's probably cut out to be a trader, and even if somebody follows it to the T, doesn't mean it's going to work for them. I know some people that have been at this for 5 and 6 years, and they still can't really make it work yet. But they're mostly where they struggle is with the mental part of it, and so much of this is mental, as we talked about yesterday, and as I talk about all the time. You have to be very disciplined, and when a trade, you have to be able to say no to that little voice that says take this trade, but it's not a good trade, but you're scared you're going to miss something, or you haven't taken a trade for a while and you're dying to take a trade. And that little voice says you better take this one, you're missing a good one, and you take it, and of course you knew all along you were wrong. And then the other thing is a perfect trade sets up, and that little voice says, hey, you know what happened last time? This is not the right trade. Wait for the next one. And you sit there and you watch the good trade go without you. So you have to be able to fight that and to be able to ascertain which voice is the right one and which one is the wrong one. And some people can do that. Some people can do it quicker than others, but it takes some training and it takes discipline. It really is what it takes. You have to be very disciplined to succeed in this job. So, but anyway, let's get to the trades. There's not a lot of them today, so I thought I would throw that out there. And people tend to like to hear the positives. I'm going to back out. You can see if I back on out, it's basically a two-tiered channel working higher. You got a midline. You can see prices working that midline all the way up until after 2 o'clock. But let me back out. We'll go through the trades. There's not a lot of them, so it won't take long today. And this is where it got really kind of quiet and boring in here. Really from about 8:45 to I guess almost 10 o'clock. So hour and a half there, hour and 15 minutes. It got pretty boring. So, but there's still some trades in there. That's the thing about it. So, but anyway, 7 o'clock came right in here, and let me state that because another trader told me that I said that in the manual to start at 8:30, which it doesn't say that. It actually just says that I gave some hypotheticals that if you just traded from 8:30 to 2 o'clock, and he took that to mean that we always start at 8:30. You really the Globex trades basically all night. It closes for 15 minutes every day. I think it's from 3:15 to 3:30, somewhere right in there. Um, so you could trade this thing 24/7, but the volume is not there. So the idea is you got to wait in the morning until there's sufficient volume that you don't have any, the market's starting to move, and that's usually around 6:30 to 7. So I usually start at 7 to be safe, and generally there's plenty of volume around 7 o'clock. So I try to be here ready to go at 7 o'clock. I don't always, I'm late sometimes, and sometimes I'm a few minutes early. But generally I'm starting trading at 7 o'clock. So I've got my chart open and I'm ready to start trading. So, and that's when I'll start looking for trades on here that I mark on the chart lesson from 7 o'clock up to our 2 o'clock cutoff time. And this white part in here between the blue this white is your 8:30 open, so I can tell when the regular opening comes. And it cut off time at 2, so I can tell when 2 o'clock is here. And I mean, you can tell anyway by looking here. This is just a visual to help you, so you got less things to look at basically. So I mean, the whole idea is we're chart traders, and we're trading off the chart, and we're trying to see everything in the price action other than the trends and the support and resistance. We put those lines on there just to help us see those important areas. But otherwise, we're trading off what the price action is telling us. And so we're visual traders. And you can see everything you need to see in here. You can tell how much the volume is by how fast the bars are printing and how many are printing. And all that you can see. So you don't need anything else on here, really. I like this 21 EMA just because you can tell when the market's getting overdone or overbought or oversold. And it's, that's generally where most of your reversals happen in an uptrend, that kind of thing. So I like to have that on there, but other than that, that's all we use it for. It's just another visual tool. So, but anyway, 7 o'clock came right in here, and you got a little double bottom, so you're moving up. You get a first entry short, a second entry short, and that's the first break of that trend line. And this looks like a range. We're probably at least going to try to run up here and fill that gap, and we're probably going to try to test this high. And so, with that being a failed second entry short, plus it's a double test. Notice we backed up there, then we came back once, we came back twice. I don't have my little line, my little support line, but you can see it right there. It's a double test, and it's a failed second entry short as well. And that's a nice bullish bar, and we're probably going to at least run to here. We may go to here. So I like that one. Unfortunately, you only get a scalp out of it, but it's a quick, easy one. And then it turns down, and it's tempting to go short, but I was a little worried going short right into that support. It doesn't end up mattering. It doesn't matter, so to speak, but we actually break lower, and you get this bullish bar. And notice that high come down first entry, and there's a second entry long, and there's actually a little trend line there. So you get a break of it, move to a new low, and a second entry long right there, right at the EMA. And I like that one because you figure we're probably going to come back up here and test this because this is looking like a range at this point. That's kind of how I was playing it up until we broke higher here. We run back up here, but we actually ended up pushing a little higher. We pushed higher again, and by that time we're just going sideways. So, but notice you got a little trend coming up here. You get a break, a new high, and you would think we would try to sell off, but when we can't, you got to consider there's a range, especially. Notice you made that low. You came back here, and so that's a double test. Plus, that's a second entry long. Notice that high, first entry, pull back, second entry. So I like that one. If you weren't quite sure there when we came back and tested that line again and gave you that bullish bar, just go long there. Just make sure you got enough room to get out. If you don't, you may when it breaks higher, drop a limit order and see if it'll come back. And that thing would have come back and filled you all the way back down here and then ran back up. So just don't let it go too far before it backs up to refill you. I talked about a trader. Somebody asked me about if you miss a trade. You can always drop a limit order and see if it'll come back in a few, in the next 30 seconds to a minute. But don't let it go on and then come back because it might, the price action might have changed by then. So yeah, if you didn't enter here, definitely enter here. That's a quick, easy move. It runs back up, it makes a double top, and it comes back down, and it bounces here again. This is so tempting. I really like that. It's not a perfect signal bar. It's another tick lower, and it's almost really a doji. So that one is tempting. But if you take it, it would have got stuck here, and when it made this 2-bar matching high, if you did take this, assuming, and you're stuck in this, just take what it'll give you, a tick or so, because this thing should have bounced and went right on back up, and it didn't. And it turns back down. So generally, I'll tell you not to monkey with your trades, but when we made this double top and didn't get through there and it bounces, it's so tempting because especially for me, because I like these kind of days. But eventually, all of them are going to have a failure, and it's going to go lower. And that one's pretty steep. So somebody else asked me that. When do you know? Generally, you ignore these little trend lines on days like this because like this, the little range is more in play. Of course, you don't really know that it's a range then, but you can see just about every one of these little trend lines don't work out. And the reason being is that the range is the pattern, so you don't get the break and new high, and it's really hard to play that. And that would have been the same thing here. You're still inside that trend line, so you're a little bit leery of it. So like I said, though, generally you want to ignore those little short-term trends when you're in a range like that. So it's easy to get fooled on that one. If you get fooled on that one and you don't get out with a tick or so, if it does break lower here and go lower, you may reverse just to make your few ticks back that you lost. But I think it's even risky because you may get a failed breakout. It looks like it's actually going to fail here, but it bounces. And this one is close to being green. I'll tell you why I like this one, and see if you can see this or not. You really need to have an eye for price action. But notice there's 2 legs down, and then there's a 2-leg correction. So generally, why I can't say that word, generally, didn't come out right or something. But anyway, excuse my brain freeze there. But generally, that is the center of a pattern. And so what you would expect here is that's 1 leg with 2 swings in it, and then this is a center pattern, and now you'll get a measured move, and you can see that. So if you recognize that this could be the next leg down, it's just so bearish there, and that's really 2 swings back regardless, so it's still a second entry. Even though we went a little lower there, that's close enough to say that's 2 swings, and so I like that one. But you got to be, like I said, that's a little more advanced. Most people trying to learn to read price action would never see that. So, but that also leads to this trade. Now if that's the case, but notice too that you had this range, and I measured this, and so you look for equal distance. And so when that leg comes down and bounces right there, you got to figure we're probably at least coming back to here. We may be going to get back in the upper half, and there may be a bigger pattern here, which there was, the two-tiered channel, and this thing just keeps going. So this is one of those little breaks lower that turns out to be an important low for the day. And if you catch that one trade, that's probably all you need today. I marked this one green, but if you could recognize what I just showed you, you could argue for that to be blue. The main reason I didn't like making it blue is because there's a little 2-bar matching high right there, and this is a down bar and that's an up bar. But this is still the low of the swing, so that's still your signal bar, and it's relatively bullish. And there is a hidden pattern there that most people probably wouldn't notice. Just remember the market moves in twos, and that's the whole idea behind second entries is the market moves in twos. And right here you got two legs, two swings down, but that's one leg, and then you got your 2-leg correction. And you wouldn't know that this was one leg until you got the 2-legged correction, and then you say, hey, that's probably center of the pattern, so this is probably one leg. And of course you could be wrong, but generally that's what you're going to see most of the time. You could probably almost take that to the bank 90% of the time, and then boom, off it goes. And that's a great setup right there. And then you run up, and notice you came back here. You came back and tested it once. You really had a double test here, but I wouldn't go long right there. I wouldn't necessarily count that as a double test yet. But when it comes back a third time, which is really where you got your separation here. So you got first test, second test, and look at that bullish bar that traded way down here and ended up, it opens way up here, trades all the way down very bearishly, then trades all the way back. It takes a lot of buying to beat that back up there and close on its very high. If you break above that, we're probably going on up a little higher. And sure enough, we did. And then we start coming back again. You had to still be thinking about this support across or this resistance across here to see if it's going to come. Prices are probably going to come back and make that support, but you need to get through this EMA first. Even though there's a failed second entry long right there, that's just still too risky. You don't know for sure that this channel's in play yet. You really wouldn't have this channel until well, you might have had that line if you used yesterday, but really you want to use today's, and that's where I originally drew it, from there to there. And then I drug it down. It never came back into play, but if you put your midline in there, you can see that was in play all day. Most of it was off the midline. And you can see prices working both that midline on both sides all the way from early this morning all the way. See how we're playing that midline? We're below it. It's acting as resistance, support, resistance. Right in here, resistance and support. Same thing right in here. Right in here, we're playing it. Right in here, we push through it. Usually it'll come back and test it a couple of times before it goes higher. So it's obviously in play. And here's the other thing about this trade right here. Measure this little swing right here, and when we start going higher, you may get a measured move, and that still gives you plenty of room, and you can see that. We actually went all the way up to where the trend channel was, but that would have given you a target and say, hey, well, I got plenty of room to get out right there, because if we break higher, we're probably going to try to reach that target. And then again, this target right here, you just measure that range and drop it down. And you can see that's where we came to. These little measured moves will really help you a lot of times. So you can't really go short up here. You don't get a very good setup right there. You get a failed second entry long here, but it's, you know, again, you're going short right down here after a big move, so you're going to need more correction than that. And another thing here, it still doesn't really set up well, but this right here is almost a perfect repeat pattern of this right here. Notice you made the double top and you come down and you get a little swing up, and then you get that little 2-legged correction. Well, here's that double top. You come down, and then you get that little two-legged correction. That's almost a perfect repeat pattern. And most people aren't going to see that, but it is. And so that means this trade right here is probably going to work out just like this trade did, which it does. But you can see right here that we get another chance. Even though we didn't take this trade right here, you still notice how it tries to go higher once, twice, and it closes below that EMA. That's where you want to enter. And it looks like it's going to come down just like it came down right here and bounce. But this trend line wins out and we end up going lower. But that is a repeat pattern right there, and it's probably going to work out exactly the same. And that means this is probably going to work out the same as this one did too. But you don't get very good. If you got good signal bars and you notice that, I'd probably mark those trades, but you don't. But this was the safe place to enter. Now you've got confirmation. You got a trap right there. You got a big bearish bar. And that's a quick, easy move. You don't get a runner there, and you don't really get a good enough signal bar here to go short on. There is a lower high here, and you still got room back to go down here. So you might take that trade. I'd want to see it at least break higher first before I really liked it. But there's a reason to consider that one. We could at least make it green. And that was pretty much it for today. By the time you got this break and now an overshoot, I wouldn't be looking for any more shorts here, really. If this wasn't so late, you may consider going long there, but it's a little bit too late. So, because the real key here was we weren't down here to the trend line, if this is right, which I think it is based on that midline, but this is played out, so you don't know what's going to happen here. So you're better off not to take anything that late in the day when the price action is not clear. It's just not clear right there. And you'll hear me say that a lot. You know, if you're not 100% sure what's going on and the price action has confused you, or you're not sure if you're reading it right, the best trade is no trade. Never take a trade if you don't, if you start gambling, you will lose at this business. We're not gamblers. We want to know that we've read the price action right, or at least we think we want to know we read it right. Or we're going to skip the trade. So, because we want the odds on our side. We're not gamblers. But not a lot of trades today, but there's some pretty good trades here today. And if you didn't see this repeat pattern, study that because you'll see those repeat patterns, and when you see them, they generally work exactly the same. So you may not get the same signal bar like here, like we did, but the price action tended to work out pretty much the same way, just at a higher level. And even this little move down would have been a good trade. Even though it turned on down, it was a repeat pattern until right there, and then it kind of switched gears a little bit. So anyway, I'm going to wrap it up. I'm pretty sure we will have, there'll be a midday chart tomorrow. I'm not sure about, I may take tomorrow afternoon off. There may or may not be a chart lesson. Of course, if there is, you should get the notification from YouTube if you've subscribed to the channel. So if you haven't subscribed, that's the easiest way, because if you subscribe, YouTube will notify you when the video is uploaded, and you don't have to come looking for it or whatever. But anyway, I just hadn't made up my mind yet. It just depends on how the morning's going, how the day goes, so forth and so forth. So there'll definitely be a mid-morning chart tomorrow. There will not be anything Friday, and there will not be anything Monday, and I'll be back on a regular schedule Tuesday. So make sure you make note of that. I'll put an email reply there for those. There'll be some people that probably missed the video or cut it off before they hear this or whatever. So I won't, if you would just hold any of your emails in regards to trading questions until I get back, just because generally what will happen is I won't be able to keep up, and there'll be a pile of them in there, and I just won't have time to get to them. And I won't have much time to read email while I'm gone. I'm going to try to stay away from it as much as I can, except for maybe emergencies. So please hold your questions till I get back till Tuesday, and because if you do, I probably won't answer it anyway. I'm sorry, but they just tend to pile up on me too much, and they get too far behind. So if people will just hold them till we get back, I might get a few extra, but at least I'm not behind several days anyway. So, okay, I appreciate it. I'll see you if you don't hear from me tomorrow, it'll be next Tuesday. Hope you have a good one. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.